So, Ghana Ground Up was honored to be at the fourth annual general meeting of the National Homeownership Fund, and a couple of things you surely will want to know from what transpired. Now, if you don't know, the National Homeownership Fund, or the NHF, is actually a government-owned company that helps make homeownership easier and more affordable for Ghanaians. And its main goal is to create better financing options, especially for people who are buying their firm, while also encouraging private developers and businesses to invest in affordable housing. In simpler terms, the NHF actually partners with banks and it puts government's money behind those banks so that these banks can lend to you at a rate that they otherwise wouldn't have been able to offer you. The NHF also runs a rent-to-own scheme and, of course, works with some developers to help bring some affordable housing projects to life. More on that soon. But really, you may want to think of the NHF this way. Its job is not to hand you the keys to a home, but rather its job is to make sure that the banks say yes to you and that yes is actually affordable for you to bear. Simple. 8.4%. Now, that's a number you may want to keep in mind. Why? Well, the NHF is cooking something and you may just want to get yourself a seat at the table for dinner. 8.4%. This is the first single-digit Ghana cedi mortgage in 30 years. 8.4% on a cedi mortgage, and with Republic Bank as the partner bank. Now, let me give you some context that makes that number mean something. The Bank of Ghana's policy rate at the moment is around 14%. Now, a home loan in Ghana can have interest rates from the mid-20s to about 30%. So 8.4% on a mortgage is not normal. It's not even supposed to exist here in the first place based on how the economy has unfolded and how real estate prices keep soaring. But the CEO of the National Homeownership Fund said it better. Here is Mr. Prosper Hoitu.
It is important to place on record that this is the first time in over 3 decades that we are witnessing a single-digit interest rate on a cedi mortgage.
30 years. Wow. How old was I then? I don't know. I mean, never mind. Anyway. Now, let's say somebody earns a net income of 2,500 cedis a month. That person will qualify for a mortgage to the tune of 143,000 Ghana cedis. Now, the monthly repayment on that will be 1,231 Ghana cedis and 95 pesos. Roughly, that's about 1,300 Ghana cedis spread over a tenure of 20 years. You may want to take out your phone and do that calculation. Just take out 1,231 Ghana cedis and 95 pesos out of 2,500 cedis that you earn a month. That is, if that's what you earn. That's a little over 49%. Now, let's make this simpler because this figure actually matters. Lenders use something we call the debt to income ratio, which is just basically how much of your monthly income goes into paying a debt. Now, the rule of thumb for most banks is, somewhere between 30 to 40% of what you earn. Beyond that, the borrower has very little room when something goes wrong. And something always goes wrong. Your bill will be there to pay, whether water, whether electricity. There could be a funeral, school fees to pay, your car. Things can go wrong, and often they do. So at 49%, it's a bit of a stretch. It's not impossible, but then it's a bit of a stretch. But then you need to understand that it's not a bad thing in itself because homes are not cheap compared to how renting actually works here in Ghana. 2 years rent advance. That is changing, but then we still have to work with it. So let's say you pay upfront. Now, if your rent is around 1,500 cedis a month, 2 years rent advance will be about 36,000 Ghana cedis paid at once. Now, many people don't have that kind of money lying around. Some people will either borrow it or probably settle for a place that is far away, but then cheaper to rent. Now, if you match that against the fixed roughly 1,300 payments you have to make a month, where in this case, at the end of the mortgage term, the house belongs to you, this is genuinely a very different proposition. It's tight, it constrains you, but then it's not bad. Really, it's the first time in a very long time that this level of affordability has become quite possible. It's a two-sided coin. The mortgage repayment is very demanding, but then if you're able to get on board, you get to have a place of your own in the years to come. Now, someone may ask, how is a rate of 8.4% even possible in the first place? Well, this is the part I really want you to understand because it's the difference between reading some news headline and actually knowing what is happening on the ground. So, Republic Bank, being the partner bank, is not being generous to you. Of course, banks don't do generous. They don't. Now, Mr. Hoitu described it in a speech as a blended financing agreement, or more like an arrangement. Now, here's what that means in much simpler terms. So, government through the NHF gives money to the partner bank, that is Republic Bank, at a cheaper cost than the bank could ever raise on its own. The bank then lends that money to you at 8.4% and still makes a good margin. Now, nobody is losing money here. The gap is being covered by public funds. I mean, you and me to a certain extent. If you know, you know. Two things follow from that, and of course, both of them matter. On one side, this is a real working rate. It's not fake. And if you qualify, you actually pay 8.4% as your interest. The second part is that this is not actually standard in the market. This is not actually what the market looks like. The mortgage market in Ghana has not suddenly become very cheap. This rate exists because it is funded. And a funded rate will last exactly as long as the funding does, which is why this next line from the same speech is a very important thing that we all need to take note of.
There is an elephant in the room. The elephant in the room is that NHF doesn't have enough resources to expand these programs for the benefit of many more Ghanaians. We are therefore making a passionate appeal to our shareholder, Minister of Finance, for more funding to enable the fund serve many more Ghanaians.
I know this can sound like bad news, but then I interpreted it a little differently. Now, the NHF is actually doing its job, and a meeting like this is where an institution accounts for itself. So then the CEO used this platform to make a funding case to the shareholder, which is the Ministry of Finance. You need to know that the NHF's mortgage program as it stands today has a ceiling, or more like it has a cap. So you need to know before you plan around it. So then the question that comes up is, who is this built for, this 8% mortgage? Now, when you look at things, minimum wage in Ghana right now is around 22 cedis a day. That amount over a month is not up to 2,500 Ghana cedis net that was used in the example that I just gave. Now, beyond the income, you need a payslip. You need proper employment records. SNIT will make its deductions. You need a bank relationship. That is generally how mortgage underwriting works everywhere in the world. The lender needs a predictable, verifiable stream of your income. So realistically, this is a product that is meant for salaried workers in the formal sector. Now, that is not meant to be a criticism. It is actually just how it was designed. But then the Deputy Minister of Works, Housing and Water Resources, Honorable Gisela Tete Agbotui, made a sidestep and asked that we really consider and find ways to get the informal sector to benefit from this scheme as well. Because when you look at it, the informal sector is actually where most of the affordable housing gap is.
The trader selling in the market should also own her house. Maybe she started building it, but because of one or two things, she's not able to complete it. How do we help Ghanaians to even complete the houses that they have started themselves? We need to have products that are like that. That will also be able to market and market them and sell them to Ghanaians, so that at the end of the day, the Home Ownership Fund will live up to its name, such that it was able to help people own homes in Ghana.
So the NHF needs more funding. Where will it come from? Well, Mr. Hoitu tabled a proposal, and here's what he said.
To address the challenge of sustainable housing finance, countries such as Kenya and Morocco are successfully implementing housing development levies or taxes while creating sustainable jobs through the housing sector. Kenya reportedly generates approximately 50 million United States dollars every month into their housing fund, while Morocco makes some $5 million per month into their housing fund. And actually, we wish to encourage governments to consider a similar housing development levy on building materials for purposes of sustainable housing finance in Ghana.
A housing levy. Now, Kenya's case, as he mentioned, is a payroll levy, 1.5% taken from every employee's gross salary, and then the employer adds another 1.5%. Now, that is mandatory, and it is collected by the Revenue Authority, maybe like GRA. Now, when you look at this, it raises some serious money, it raises some serious cash, and that is where the 50 million a month comes from. Now, when we look at the other case, which is for Morocco, that works quite differently. Their levy targets the cost of building materials instead of payslips. So the levy is collected further up the value chain, but it raises less money. So what Mr. Hoitu proposed for Ghana is the style that is used in Morocco, that is a levy on building materials instead of your salary. So here's what you should understand about that if it ever happens. Now, a materials levy shows up in the price of cement and iron rods and all the things that you have to buy for a house, and developers will definitely pass that on to buyers. So in the short term, it makes building slightly more expensive. The argument for it is that the money it raises gets recycled into servicing land, into building infrastructure, and of course, subsidizing mortgages, which brings the cost down by more than the levy added. And that's a trade. And this works if the money is well managed and actually reaches where it is supposed to go. That is housing.
Through the pilot program, the initiative is implemented across 8 selected districts, with each participating district targeted for the development of housing units designed to meet modern standards of efficiency and sustainability. For us at the ministry, the Greenville District Housing Program is not merely another housing project. It is part of a broader effort to rethink how Ghana plans, finances, and delivers housing.
The Greenville District Housing Program, that is 8 pilot districts outside Accra and Kumasi. Now, this one in particular is interesting when it comes to the strategy. I say that because, the housing policy in Ghana has behaved for decades as though the country has 2 cities and then everywhere else. But that's not the case. There are many places in Ghana that are growing and developing really, really fast. Ho is growing, Sunyani is growing, Takrady is growing, and of course, district housing is cheaper to deliver because the cost of land is less and you're not fighting the chaos of land titles in Accra. Now, there's also a study running with Shelter Africa Development Bank, and they call it the viral model. And this basically assesses where the housing system in Ghana breaks. Now, this will eventually feed into a national strategy document, and then this will be presented at a national conference on housing finance somewhere in early October. Now, that conference is definitely a thing to watch. The Ministries of Finance, Works and Housing, the Bank of Ghana, Shelter Africa, everybody will be in one room, and the aim is just to agree on a framework on how affordable housing in Ghana gets financed. That's a step in the right direction, and hopefully it brings up something meaningful and tangible that we can all benefit from.
As we look ahead, we must move from individual interventions to scale. Scale is the next frontier.
Scale is the next frontier. Now, they're right. It is exactly the challenge that we've been facing.
We must develop financing structures capable of attracting pension funds, insurance companies, banks, institutional investors, and international development finance into Ghana's housing markets. We must deepen the use of capital market instruments and explore mechanisms that can transform housing from a largely fragmented asset class into an investable sector. And we must do without compromising affordability.
So let me leave you with what I actually took from the annual general meeting. A few years ago, a single-digit mortgage in Ghana was not feasible. But then today, the CEO of the National Homeownership Fund stood at a podium and read it out as a normal announcement, with a rate, with a bang, and a worked example. Of course, when you look at that mortgage rate of 8.4%, that number moved. Of course, somebody moved it. And it moved because inflation came down and the whole cost of money in this economy shifted, which means it can move further down. Now, is the fund short of money? Yes, and the CEO said so himself rather than pretending otherwise. Now, is 49% of your income a tight repayment? Of course it is. Does the product currently reach the majority of Ghanaians who work without a payslip? No, not yet. But all 3 of these are problems we can solve. And if you're thinking about this scheme for yourself, of course, go and watch our full interview with the CEO of the National Homeownership Fund. The full link will be below, or I think up here or here. And of course, start getting your documents in order now, because these things move slowly until suddenly everything begins to move very, very quickly. Thanks for joining us again on this podcast. We've been away for a little bit, and of course, we're retooling, we're refining, and we're coming back with better, bigger, and simply more. I'm Desmond Kafui, and this is Ghana Ground Up. If you've not subscribed yet, please do well to do so, because you may want to be on board for what's coming up next. Catch you in the next one.